There's been an overriding bullish feel. Is it justified with markets at record highs?
I think it is, and the records at market highs to me is always a bit misleading because the way we're thinking about this is it's really a tale of two cities out there. You have some segments of the market that are up tremendously, and you have others that have been completely neglected throughout the year. So when you look at the multiple divide between growth and value right now, you have the growth stocks trading at a multiple of 28 times, the value stocks trading at a multiple of 17 times. That's a 60% premium on the growth stocks. And the last time we saw multiple divides like that was actually during the dot-com boom. So I think there's bullishness. I think the bullishness is rational, but the leadership isn't going to come from those that have led in the past year. They might continue to work, but they're not going to lead. What's going to lead is the ones that have been left behind this year.
Jenny, we've heard this story before. We've heard it a lot, several times in just the past year about some of these hot stock sectors that are due for a pullback. You mentioned the valuation gap. Is there any kind of a mean reversion, any kind of a closing of that gap that's going to happen, and how will we know it's happening?
Yeah, so this is really interesting. I see the peak in the valuation divide was really September 2nd. And what led up to that peak divide was, do you remember how people chased the splits in Apple and Tesla, like as if that added economic value, which it didn't? But if you look since September 2nd, or even since the beginning of this quarter, I don't know if the word rotation is right, because rotation usually implies losers and winners. We're not seeing that. We're just seeing a major leadership change. So since September 2nd, you can see that value is actually up about 10%. Guess what growth has done? It's pretty much flat. Quarter to date, if you look at energy, for example, energy is up like 30% this quarter, and tech is up, I think, 6%. So you start to see leadership change. So I don't know if rotation is the right word. Leadership change is really the way to focus on it.
All right, so
and it's been significant and it's been real.
By the way, so if there is a leadership change at play, Jenny, then what exactly do you do to position for that in 2021? What are the types of stocks and industry groups that you are buying right now?
I don't look at the industry groups so much, and I think the best part of what we're in right now is this is a true stock pickers market. So you can go out there and you can look at, say, CarMax, for example, versus Carvana. These are almost identical companies. Meanwhile, Carvana somehow became one of the tech darlings. It's up 200% this year and loses money. CarMax, on the other hand, is very profitable, is up 8% and trades at 21 times earnings. So you can find things like that. You can find things like Intel, that's still down 15%, trades at 11 times earnings. Meanwhile, is one of the top 10 earnings contributors to the S&P 500. You can find IBM, down 6% still year to date. Totally underappreciated in that they might be a major leader in the AI boom that we're going to see coming up. There's all sorts of stuff to find out there.
So I mean, those names that you just mentioned, I know you could go on, but there's a theme there. These are established names with valuation discounts, right, to the rest of the market. What exactly does that mean then for some of those overvalued sectors? Would you sell them now or just ride the wave?
I think it depends on what your capital gain is. So I was talking to a client yesterday who has a huge position in Pinterest and an insane capital gain. In that case, it doesn't make sense for him to just sell that. It makes sense just to ride it, because whether Pinterest is at 70 or 50, the guy still has a huge profit. So I think it depends. You know, you can just ride them if you have that wherewithal. But if you're a trader, or if it's in your IRA, you want to take money off the table, maybe you take money off the table and switch out of those high-flying names and into things that have more leadership. So it really depends on your specific situation. But if, like, taxes weren't a part of it, I'd get out of them now. I'd say, you know what, I've booked my gains. I think they might plateau for the next 3 years, 5 years, 10 years. I think there's more money to be made in other places that haven't performed as well over the next 1 year, 3 years, 5 years.
Shepard Smith here. Thanks for watching CNBC on YouTube.